Joining us for a conversation is Jordan Trimble, the CEO of Sky Harbor Resources, which is a preeminent uranium explorer. Mr. Trimble, welcome to the show, sir.
Thanks for having me again. Looking forward to catching up.
Well, glad to have you back on the program, sir, to provide us with an overview on some of the key milestones as we look back on the successes of 2020 and then provide shareholders with a forward look into 2021. Mr. Trimble, before we begin, for someone new to the story, please introduce Sky Harbor Resources and the opportunity the company presents to the market.
Sure. So Sky Harbor Resources is a high-grade uranium exploration and early-stage development company. We have a vast project portfolio, all of the properties located in northern Saskatchewan in the Athabasca Basin, which is the highest grade depository of uranium in the world. We built the portfolio up over the last 8 years or so. Two of our projects have deposits. Our flagship project is our Moore Lake project, which we've been actively drilling and exploring and delineating high-grade uranium zones over the last several years. That's really been the key value driver for the company and will remain so. We have then a second strategy, which is and model, which is called prospect generation. So we go out there and with our large project portfolio covering over 500,000 acres, we carry out a little bit of exploration on these other secondary projects, but ultimately what we're looking to do is to package them up and option them out or sell them to strategic partner companies. We've since 2017 completed 3 deals with 3 different partners, one of which is industry leader Orano. They currently have an option to earn in up to 70% at our Preston project, which is over on the west side of the Athabasca Basin. We have another now joint venture partnership with a company called Azincourt. They just completed their 70% earn-in, having spent several $1 million in exploration, issuing us shares of the company and some cash payments as well. They're actively exploring and currently drilling our East Preston project, which we now hold a minority interest in. And then last but not least, and more recently, we just completed a deal with a new Australian company, ASX-listed Valor Resources. So at the North Falcon Point project, they have an earn-in option where they can acquire up to 80% of the project. And in order to complete that, they have to spend about $3.5 million in exploration, pay us just under $500,000 in cash, and we were recently issued just over 233 million shares of the company, which at the current price is valued at about 1.7 million. So collectively, these are option deals or joint venture partnerships that allow us to focus our time, money, and efforts at our flagship Moore Lake project while partner companies fund the exploration and generate news flow at our other properties.
2020 was an exceptional year for shareholders, which saw the share price move from 8 cents all the way up to 33 cents and recent new highs this year up to 36 cents. Now, this is all during a global pandemic, I might add. Sir, please share some of the key milestones that Sky Harbor Resources accomplished last year.
We'll start with the flagship project, Moore Lake. As you and your audience saw, we had 2 drill programs that we carried out, one earlier in the year and another one in which we just released results from over the last several months. We had a very successful year at the project, and that was certainly a contributor to the share price and valuation increase that we saw. In particular, the last few news releases that we announced in December and January with the results from the late summer and fall drill program included some of the longest continuous widths of uranium mineralization ever discovered at Moore. As you may recall, we have a main target area, which is called the Maverick Corridor. It's about a 4.5 kilometer long corridor. That's highly prospective for uranium, high-grade uranium. And what we've been doing more recently is we've been drilling into a new geological setting called the basement rock. So we've just in the last several years refined targets, deeper targets below the unconformity, which is about 260 to 270 meters. And using some new geophysical techniques and some new geological modeling, we've been able now to more effectively target these basement-hosted high-grade zones. And so just in this last program, as I mentioned, some very long widths, including 17.5 meters of 0.72% U3O8. Within that, there's a 10-meter zone of 1% and some higher grade zones within that as well. So very exciting. We feel like we've just scratched the surface for these underlying basement rocks at the Maverick and Maverick East zones. So we do have plans in the upcoming drill programs. We do have a program planned to start in the next month or two. We will carry out a second program later in the year as well to follow up on these results that we announced over the last several months. We think that there is a much larger, higher grade zone or multiple zones of uranium mineralization at depth. But also we have several other targets at the project that we're going to be testing, including continuing to drill along strike to the northeast on this 4.5 kilometer long corridor. We've really only systematically drill tested about half of it. Or just under 3 kilometers of it. And so there's a lot of room to move along strike and at depth. And there's some other high priority targets on the project as well. And again, this project is located on the east side of the Athabasca Basin, proximal to infrastructure. It's about 15 kilometers east of Denison's Wheeler project. Denison is our largest strategic shareholder. Their president and CEO, Dave Cates, is on our board. So we have a very close working relationship with them. So any additional discoveries and continued resource delineation on this project is important given the location of the project proximal to infrastructure. There are other parts of the basin where you don't have the kind of infrastructure that you have on the east side of the Athabasca Basin, where you have the current operating mines and mills, power and roads. So keep an eye out for news flow on Moore Lake as we continue to explore and to drill the project. And then, as I mentioned earlier, we have partner companies that will be carrying out exploration at our other projects.
Leaving the Moore and discussing those partners, a big feather in your cap is the East Preston project, which has received a lot of coverage recently with your partner Azincourt. And this has been a big win for Sky Harbor. Can you comment on that, sir?
Yeah, so they've just recently announced a drill program of 2,000 to 2,500 meters. They have mowed and are just started drilling now. They've had a pretty good move in their share price as a result of this, and as a result of a rising tide we've seen in the sector. And again, this is an important part of our story, having partner companies fund these exploration programs. It's, as I said earlier, part of our broader prospect generation model. And as I mentioned earlier, we do have other partner companies. Just this morning, we announced that our partner at North Falcon Point, the new partner, the Australian listed company Valor, is going to be starting their phase 1 program at that project, which will include an initial geophysical program, followed by a phase 2 field program, getting into the field, doing some geochemical sampling, some additional ground geophysics, and that will all lead to a phase 3 program later in the year, which will include an initial drill program. So again, very excited to be working with these partner companies, looking forward to the results that are generated from these programs.
Leaving the project site, looking at the macro picture for uranium, what has your attention?
Yeah, look, a lot's happened since we last spoke in November. Obviously, we've seen a move higher across the board with the uranium companies, and there's a lot to talk about, a lot to unpack there. As we probably talked a little bit about early or late last year, we have seen more generalist and institutional money, especially with an ESG mandate, come into the space. You and I have spoken at length about the underlying fundamentals, and just to reiterate that, and some of those main points, which have been in place now for several years. You have a major supply side response that's playing out. Initially it was to the low uranium price environment. We saw a number of mines go offline. So we've seen project deferrals and production curtailment over the course of really the last 4.5, almost 5 years. But then we saw that exacerbated last year with the pandemic. And we saw in April at one point almost 50% of primary mine supply offline as a result of this. And this just shows the risks to the supply side and to supply shocks, which in the past and in previous cycles, we've seen that have a major impact and be a major catalyst for a higher uranium price. Bottom line is you have annual demand of about 180 to 185 million pounds of uranium used as the fuel in nuclear reactors. And in 2020, we only had about 120 million pounds of primary mine supply. So a major supply deficit. We expect this year, assuming there aren't as many supply disruptions as we saw in 2020, that number will move back up to about 135 to 140 million pounds of demand. But again, that's about a 40 to 50 million pound shortfall. So a big supply side deficit as we've seen. This has grown over the last several years, and that means we're having to continuously eat away at inventories and secondary supply. We've seen the spot market and the mobile secondary supply shrink. We've seen a tightening of the market, and that's what we saw in 2020 was this, especially in April and May when the spot price jumped up relatively quickly. That's what we saw happen. There was a tightening of the market. We saw producers that had to shut down production buy in the spot market. So both Cameco and Kazatomprom have been buyers in the spot market to make up for their lost production. So yeah, the bottom line is we simply do not have enough new supply that can come on to meet the growing demand for this commodity, for this metal. And just more recently, talking a little more specifically about the market, as I mentioned, we've seen new money come into the space, generalist and institutional interest. We've seen the sentiment for nuclear energy improve significantly over the last several months as it pertains to nuclear being really the only real solution to climate change and to countries going carbon neutral. We've seen some major announcements out of China, out of the U.S. and other countries worldwide that they're planning to decarbonize their electrical grids by 2050 to 2060. And again, in order to do that, nuclear energy needs to play an important role. It is the only source of baseload clean electricity that's reliable. And so we will see I believe, over the next several decades, a continued build out of nuclear reactors globally. We've seen also the advent of these SMRs, small modular reactors. I think that will add a significant amount of demand over the coming decades, especially in the Western world. And then we see places like China and India, and then other parts of the developing world that continue to roll out these larger reactor models that consume a lot of uranium. So as we see the push for clean energy, as we see the push for decarbonization, we will continue to see a rise in nuclear energy. And obviously that's positive for uranium mining companies. And then, we talked a little bit about, I believe, in the last interview, some notable business leaders and specific institutional investors that have been talking about nuclear energy, including Bill Gates, Peter Thiel. More recently, we've seen Larry McDonald and Michael Burry, who have advocated for nuclear energy. I think as we continue to see the mainstream and as we continue to see these business leaders talk about nuclear energy, we will see that positive sentiment continue to improve and increase. And that will obviously all be positive for uranium and uranium mining companies as well. And then just more recently, this is just within the last week here, we are starting to see as this capital flows into the space, we're seeing companies like Yellowcake and other physical holding companies raise more and more money. Yellowcake just announced a $140 million financing, which they will use then to buy over 4.5 million pounds that will be taken directly from the market. So again, tightening the market, which will help drive a higher uranium price. I think we see that trend continue as, again, more capital flows in. You'll see these physical holding companies be able to purchase more uranium, which will tighten up the market. And as a result of that, you will likely see a higher uranium price. So there's a lot to look forward to. There's a lot of moving parts right now, but bottom line is the underlying fundamentals, which I believe are the most compelling of any metal out there, people are finally paying attention to this, and we have seen in the last several months new money come into the space as the world looks to go into these ESG-friendly sectors, and as countries globally look to decarbonize their electrical grids.
Jordan, what I'm hearing are catalysts, and even more catalysts. I think.
Yeah, and I was just going to, one other thing good to point out too is, for people looking at the sector going, okay, well, have I missed the boat? We've seen, a move higher from October, November of last year. But, as you and I were talking about offline, I think we're still in the early days, right? You got to remember, this was a sector that was beat up for many, many years. There was very few companies that were active in the space. Certainly, there's very few active exploration and earlier stage development companies, so it's not a crowded sector. The total combined market capitalization of all publicly traded uranium companies is still sub 20 billion. So I do believe that we are in the very early innings of this next bull market in uranium, and I think there's still a lot of potential return available to investors entering the space now.
Yes, put me on record for this one. I'm confident that this is just the beginning at 36 cents. This is the future is a lot brighter here for us at Sky Harbor Resources. I'm a proud shareholder, as you know that as well, sir.
Absolutely.
Switching gears, Mr. Trimble, provide us with an update on the capital structure for Sky Harbor, please.
Sure. So there's about 100 million shares issued and outstanding. As you and I have talked about in the past, we have a great shareholder base. It's one of the things we like to highlight. And one of the talking points more recently has been, and this is, as I pointed out earlier, we've seen this across the board, more institutional interest. For a small cap company, typically it's hard to generate much interest with institutional investors, but we're seeing more institutional interest, especially when we're raising money over the last, call it 12 months or so in particular. And I think we'll see that continue. And so we've good share structure. We're well capitalized now. Just to point on that, we have had warrants exercised that are expiring over the next several months. So we are continuously raising capital through that. Currently, we have over 4.5 million in cash and stock. As I pointed out earlier, with the recent transaction with Valor, we received about $1.7 million in stock. And so we're well capitalized to complete all of the exploration and drill programs we have planned at our flagship project. And we also have partner companies funding the other programs at our other projects. And we also do have ongoing cash payments and share issuance from partner companies as well.
Great business acumen and great stewards of capital. I have to give it to you, sir, here. Any final words for shareholders?
No, I think that covers it off. Again, we have a lot going on this year, much like 2020, where we saw results and news flow help spark a rally in the market, in addition to an improving macro thesis and more interest coming into the space. 2021 is likely going to be our busiest year yet. We are currently talking with several other companies on other joint venture and option partnerships, so keep an eye out for that, as well as the existing partners carrying out their exploration programs. And last but certainly not least, and really our main value driver for the company will be our upcoming drill programs at our flagship Moore Lake.
Jordan, if investors want to get more information about Sky Harbor Resources, please share the contact information.
Yeah, so the easiest way to get in touch with us is through the website. All of our contact information is on there. We're very accessible to answer any questions that investors may have. The website is www.skyharborltd.com.
Mr. Trimble, thank you for joining us today. Wishing you and Sky Harbor Resources the absolute best, sir.
Thank you.